So if there's one thing that we think our clients should be thinking about as they're heading into the new year, it's the proposed tax changes with the administration. So it's not a done deal, but the information we're receiving is providing us some really good insight to things that are coming down the pike. So we could think about it from tax rates, we could think about it in terms of estate tax planning, in terms of maybe more proactive gifting, acknowledging that the unlimited credit exemption is going to be much lower starting next year. So if you want to be really proactive in terms of giving more, now is the time you need to be thinking about that and prepared to hit the send button, as I like to say. It's also just taking a step back and looking at your financial situation and saying, not only from an asset allocation, but from an asset location perspective, right? Certain investments pay different type of income and are taxed at different rates. There may be an opportunity to restructure those investments or going forward, place them in different accounts so they're more tax efficient for a client. As we all can acknowledge, we're seeing higher inflation, we're seeing economic growth rates that are starting to get muted, right, with this kind of financial uncertainty, and I think generally most economists would expect that interest rates start to go higher. So that's a difficult environment, not one that you can't navigate through, but certainly difficult and more challenging than we've experienced over the past 4 to 5 years. So we want to make sure our clients are well prepared from a planning perspective and from an asset allocation perspective, so they're maximizing the returns for the least amount of volatility that they must accept to achieve the goals that they've shared with us are really important to them.